Hello everyone. This is the pre-market report video for today, 10th Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened yesterday. In line with the global cues, early morning Nifty opened a gap up of 140 points. Then it quickly reached the resistance 21,700 and maintained there till 2 pm. Then at 12:30 pm, Germany's industrial growth data was released and it contracted for the 7th consecutive month. This is the problem with the non-US macro. For most part of the time, they won't impact, but out of the blue, they influence. This is applicable for Japanese macro as well. Anyway, the problem in Germany was, so far for the last 6 months, market expected the contraction and the incoming data also contracted, so no issue there. But last month, market expected the expansion of 0.2%. In that place, industrial production contracted for 0.7%, which in turn triggered the sell-off in the whole global market. For example, when it happened yesterday, I was watching the Nifty's price movement, so I took the snip when the price started to fall. If required, please pause and have a look. Here, I am comparing the Nifty with Germany's DAX index change percentage. As we see here, the moment Germany market opened, our Indian market started to fall, and as the selling accelerates in Germany, so does our market as well. Here, I am not saying Germany's problem becomes India's problem. Rather, I am just saying the contraction problem there triggered the sell-off here. And then the Nifty expiry and the negativity in the banking stock and FMCG, which we have been discussing in the last 2 days, intensified the selling and erased almost all the early morning gain. But fortunately, Nifty closed positive. Sector-wise, again, other than financials and FMCG, all the other major 11 sectors closed positive. Institution-wise, after 3 days of net buying, FIA turned net sellers. The net sold for 990 crore rupees, whereas DIA net bought for just 105 crore rupees. So that's the summary of Indian market yesterday. Germany's industrial contraction triggered the selling, where then Nifty expiry and financials and FMCG negativity erased the positive gain. Actually, after our market close, European market recovered some and trimmed their losses, but it still closed negative. Coming to US, the story was not so different. Last night, US trade deficit data comes surprisingly narrow, which strengthens the dollar against euro and increased the 10-year bond yield back above 4%, which on the intraday dropped to near 3.97%. Just for info, in the last few days, all the global stock market rally is mainly betting on the interest rate cut in the upcoming March month. Then this coming Thursday, US consumer inflation data is going to release. So basically it's like a decider day, and then US earnings season starts on Friday. So similar to Indian market, this 10-year bond yield increase created the profit booking. Thus all the index opened over 0.5% gap down, but as the day progressed, all recovered most of it. Again, mainly supported by AI tech stocks, Nvidia and Google, whereas Tesla dragged the market down as they cut their EV declared range in all the models somewhere around 30 miles to meet the new regulation. In the end, in US, Dow Jones decreased 0.42%, S&P 500 down marginally by 0.15%, whereas Nasdaq increased marginally 0.09%. On the more positive side, US VIX, it decreased to 12.75 from above 13 on Monday night. About oil, still the protest in Libya is ongoing, hence the supply of 3 lakhs barrels per day completely stopped, and also there is somewhat disruption of ship movement in Red Sea, which in turn increased the oil price by over 2%. At the time of this video, WTI crude closed at near $72.3 US per barrel and Brent crude is trading around $77.5 US per barrel. Just one more thing. Yesterday in the pre-market video, we discussed about the relation between the oil's official selling price and the market influenced price and its impact on oil refining companies. So one of the viewers raised the question, when the oil price drops, then isn't like the raw material price drop, which in turn has to increase the profit margin, then why do all the energy stocks all around the world drops? For everyone's benefit, I like to answer that here. At first, it's little bit complicated for me to understand. I'll try to explain it simply. First of all, most of the oil refiners all around the world, they are not just refiners including ONGC, they are also the producers. For example, Shell mining the oil and gas in both Qatar and Saudi, and then they refined it in Netherlands and UK for supplying to Europe. Similarly, ONGC, I think mining in India as well as in Nigeria, and most of us know Reliance to mine the oil. So that's the first point. In most cases, oil miners are the oil refiners, hence the price drop affects directly. Then second, this oil refiners buys the oil on the forward contract. For example, whatever the price they pay today is for the March month, then based upon rotation, it takes somewhere between 2 to 3 months for shipping and refining process. Then in June, July, when the oil price dropped further means, then the oil refiners has to sell based on that day market price. So sometimes this refiners buys the oil at higher price and they sell it on the lower refined price based on the refined day market price. Third, it's little bit more complicated as we discussed yesterday. Most of the time, big refiners buys oil directly on the official selling price. At present, Arab Light premium is around $80 per barrel, whereas the market price is much lower than that. So that also plays the factor. Hence, maintaining the high gross refining margin in the oil refiners is an art and difficult, especially in India since diesel, gasoline and LPG price all controlled by the government. I hope it's clear. Anyway, let's move to our regular topic. In case of Indian ADR, all close to negative and more negative than Indian market. I mean, as it is all down by around 1 to 1.5%. However, if we calculate the monthly arbitrage, then banks looks more of a flat to negative, whereas IT stocks indicating near 1% down. But still, those negativity was not transferred to GIFT Nifty. Early morning, it closed at 21,596. At present, the premium is around 60 points to spot Nifty. So, kind of indicating flat to positive opening. Again, I'm getting some comments from viewers that how I am calculating the premium. It's very easy. I will explain it in Friday's video since already today's video is becoming huge. So, that's what happened on global market yesterday. Let's move to the India specific info. First, on the positive side, Goldman Sachs increased the Nifty's year-end target to 23,500 from their previous target 21,800. They cited India's fast GDP growth and the strong domestic factors as a reason. This we can consider as short-term positive. Second, in the last pre-market video, we discussed there was a rumor that ZTV and Sony merger was called off kind, which in turn yesterday crashed the Sony stock to down 8%. Then in the aftermarket hours, Z Entertainment clarified to SEBI that it was just a rumor, so maybe that stock might bounce back today. Third, Moody's downgraded the Vedanta bonds, which is huge negative. Already they are paying interest like 15 to 16%, so that stock will be on focus today. As a summary, global momentum is mildly negative, or we can say it's paused till the inflation data release. On the positive side, GIFT Nifty is indicating flat to positive, and also for yesterday, I'm guessing it's just Fin Nifty expiry related down. However, the ADR's overwhelming negative is a bit of concern. Then, as per stock open interest, Polycab India, Dr. Lalpath Labs, Navin Fluorine, PFC, AU Small Finance Bank, SRF and Page Industries got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Bajaj Auto, JK Cement, DLF, Petronet, HCL Tech, Federal Bank and Godrej Properties got an increase in open interest with a positive price close indicating the long build-up. Regarding the things to look out, at 1:30 p.m. there is a schedule for release of Chinese loan related data, and in the aftermarket hours, crude oil inventories and US government's 10-year note auction are the important things we have to keep an eye out today. Coming to technical, as we discussed, Nifty had a roller coaster ride yesterday and ended almost flat. Thus, on the daily chart, Nifty formed a medium bearish candle with a long upper shadow and mild lower shadow with the formation of inside the Monday's candle. So, predominantly breaking either way will determine the short-term trend. That's the strong fact. However, because both this candle is bearish red one, so the formation is called homing pigeon candlestick formation, meaning the second red candle opening and closing were within the first red candle, suggesting an erosion of the downtrend. Hence, it's a bullish reversal signal. If the lower shadow is higher means, then we might say the bullish reversal got high reliability, but unfortunately, the lower shadow is very short, so it's a low to medium reliability. Overall, technically, I could say 60% the breakout will happen on the upper end. Again, it's just my opinion. Anyway, 20-day moving average is 21,453 and the 50% Fibonacci retracement level is 21,406. So, both these can act as a support on the downside. In case of Bank Nifty, it opened positive but closed around 200 points negative. I mean, it's facing a strong hurdle at 48,000 mark, and unlike Nifty, yesterday it breached the Monday's low. So on the daily chart, it formed a long bearish candlestick pattern with a consecutive day lower low, lower high formation. Now the immediate support is at 47,000 to 46,900. A breach below likely to trigger aggressive selling pressure, potentially leading to further downside momentum. On the options front, the maximum call option open interest was at 21,700 strike, followed by 21,600 strike, with maximum new call rating at 22,100 strike, 21,700 strike. So options data also suggests that Nifty will face resistance at 21,700. On the downside, the maximum put option open interest was at 21,000 strike, followed by 21,500 strike, with a new put rating at 21,200 strike, then 21,400 strike. Thus, as an immediate term, 21,500 to 21,400 is expected to be a key support area. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.